Hello class, welcome to another discussion for accounting for business combination. So in this particular video, we shall be discussing the another mode for business combination, which is stock acquisition. Okay. So, as far as the topic is concerned, the consideration given up to affect the business combination in a stock acquisition is the same as the consideration given in a merger in our previous discussion. But in a stock acquisition, as the term itself, no, is the purchase of stocks to gain control over an entity, 'di ba? Kasi in a merger kasi, 'di ba? In a merger, the acquirer purchases the net assets of the acquiree, no? So in stock acquisition, okay, the acquirer or the parent will purchase the outstanding share enough to obtain control, no, over an entity. Okay. So note that in a stock acquisition, the parent acquires from the shareholders of the subsidiary and not directly from the company. So in a stock acquisition kasi, the parent or the acquirer will acquire the outstanding issued and outstanding shares of the acquiree. No? So the acquiree will not issue additional share, okay? But instead, the acquirer will purchase the outstanding issued and outstanding shares of the subsidiary, no, or the acquiree enough to obtain control, no. So kasi if the acquired company issued shares to the acquirer resulting to a control, no, of the purchaser, okay, so the effect is a reverse acquisition, and we do have separate accounting for that, okay. So in a stock acquisition, again, the parent will purchase shares from the outstanding issued outstanding shares from the shareholders, those in the hands of the shareholders, not directly from the company. Okay, so to start with the stock acquisition, the following must be determined. So first, who is the acquiring company, yung acquirer, and then whose stocks are being acquired or yung acquiree. Okay, so the date of acquisition, okay, the control gained as a result of the stock acquisition, the fair value of the net identifiable assets, and then the method of measuring goodwill and non-controlling interest. Okay. So to illustrate, assume that on December 31, 2017, P Company acquired all the 10,000 issued and outstanding shares of S Company's 100 par value common stock for 2 million cash. So in this case, this is 100% acquisition because P Company acquired all the issued and outstanding shares of S companies, no? S company being C acquiree. Okay. In addition, P company paid professional fees to accomplish the combination of 100,000. So P company incurred acquisition-related costs amounting to 100,000. So to record the acquisition of stock and the acquisition-related costs in the books of P Company on December 31, 2017, no? So first, to record the acquisition, mag-debit lang tayo ng investment in subsidiary, no? Or investment in S Company for 2 million, credit ka ng cash for 2 million. Also, to record the acquisition-related costs, mag-debit ka lang ng acquisition expense, credit ka ng cash for 100,000. Okay? So, you take note that the entries don't record the individual underlying assets and liabilities over which control is achieved. Kasi diba, unlike with merger, that in the date of acquisition, the acquirer will debit all the assets acquired, no, including goodwill if the merger resulted in goodwill, and credit liabilities assumed or acquired, and credit whatever part of the consideration, and credit gain, no, if the merger resulted to a gain, no. So yan sa merger, di ba? So in stock acquisition, instead, the acquisition is recorded in an investment account that represents the controlling interest in the net assets of the subsidiary. Okay. So, on the date of acquisition, no goodwill or income from acquisition is recorded by the acquirer. So, diba, unlike with merger, as what I've said kanina, the goodwill or gain resulting from the merger is recorded on the date of acquisition. Okay, so this in stock acquisition kasi, this goodwill or income on acquisition are to be recognized only in consolidated financial statements. So the goodwill or gain will never be reported in the separate financial statements of the parent or the acquirer. So, after the acquisition, S company will not be dissolved. No, unlike with merger, that yung acquirer is ma-dissolved. So, a relationship now exists that of parent subsidiary relationship, no, between the acquirer and the acquiree. So, P company is now the parent and S company is now the subsidiary. Okay? So, if no further action is taken, the investment in subsidiary account would appear as long-term investment on P company's separate financial statement of financial position. So, however, such presentation is permitted only if consolidation were not required. Okay, so or when control does not exist. However, when control exists, no, so it is required that the um, the separate financial statements of the parent as well as um, the separate financial statements of the subsidiary will be consolidated. No? So the statement of financial position of the two companies must be combined into a single consolidated statement of financial position. Okay? So we'll discuss a method of measuring goodwill and non-controlling interest. So this is very important, no, in accounting for business combination to determine the method of measuring goodwill and non-controlling interest. So there are two methods, no, in measuring goodwill and non-controlling interest. We have full goodwill approach and fair value option, or partial goodwill approach or proportionate basis of goodwill. So in full goodwill approach, in this method, goodwill will be recognized and allocated in the part of the controlling interest or non-controlling interest. Meaning to say, goodwill may share si non-controlling interest sa goodwill pag full goodwill. Pero, pag partial goodwill, the goodwill or gain acquisition will only be allocated to the controlling interest. Therefore, walang share si non-controlling interest sa goodwill. If the problem is silent, so full goodwill approach is used. Okay. However, there are instances that full goodwill is inapplicable. But if the problem is silent, no, we'll use full goodwill. Okay. So, to compute for goodwill, no, according to IFRS 3, paragraph 32, so there is goodwill when the acquirer shall recognize goodwill as of the acquisition date measured as the excess of the aggregate amount of consideration transferred, non-controlling interest, plus fair value of previously held equity interest over the fair value of your net assets. Okay, so if may excess itong aggregate amount of consideration transferred over plus non-controlling interest plus fair value of previously held equity interest over fair value of your net assets, then there is goodwill. Okay. However, if the amount of the fair value of net assets is in excess of the aggregate amount of consideration transferred and non-controlling interest, the business combination will result to a gain on acquisition. Okay. So, it should be noted that in the separate allocation of goodwill, the amount of the fair value of the net assets attributable to the controlling interest can be excess of the consideration transferred. Okay, but the fair value of the net assets attributable to the non-controlling interest or yung proportionate share ni non-controlling interest sa fair value of the net assets of the subsidiary can never be in excess of the fair value of the non-controlling interest. Meaning to say, yung fair value na non-controlling interest will never be lower. So, dili siya dapat mas lower sa proportionate share of NCI's proportionate share or non-controlling interest proportionate share in the net assets or in the fair value in the net assets of the subsidiary. No? So, if the company resulted in a gain on acquisition, no part of the gain shall be allocated to the non-controlling interest. So the reason behind that the parent acquires the subsidiary because the acquired company has worth to the acquiring company. Thus, we should never assess the fair value of non-controlling interest lower than the fair value of the net assets attributable to non-controlling interest. Okay, so we shall be em- em- emphasizing that later, no, on sa given illustration. Okay, so we have here, no, on case 1, to illustrate, no, the methods of measuring goodwill in non-controlling interest. We have case 1, no. Assume that JN Corporation acquired MM Company at a price of 4 million, okay, for a 80% interest in the company, okay. So the fair value of the net identifiable assets of MM amounts to 3 million, okay. So, okay, MM acquired for 80% in the interest of, okay, JN acquired 80% in the interest of MM company for 4 million, diba? Okay, so then the fair value of non-controlling interest is not given. So as what I've said kanina, if it's silent on what measurement approach is used, so we'll use full goodwill or fair value option. So then we should use the fair value approach if possible and assume an amount of the fair value of non-controlling interest from the consideration transferred. Okay, so we'll use full goodwill or fair value option, but since there is no given fair value of the non-controlling interest, we assume a fair value of non-controlling interest. So how could we assume the fair value of non-controlling interest? Okay, so since we've paid 4 million, di ba? We've paid 4 million for an 80% interest. No? So, how much pala yung babayaran if we acquire 300%, di ba? So, kasi di ba automatic, di ba na, when you purchase 80%, the non-controlling interest is 20%. So, to assume the value of the 20%, you simply divide 4 million by 80% to get the 100%. No? So 4 million divided 80%, that's 5 million. Okay? So 5 million times 20%, that's 1 million. So 1 million is our assumed value of our non-controlling interest. Okay? So since the formula for goodwill is consideration transferred, which is yung 4 million to purchase 80% plus the fair value of the non-controlling interest, which is 1 million. So we have 5 million in total. Then the fair value of net assets is 3 million. So we have a goodwill of 2 million. Okay? So yung 2 million na goodwill, no, since under full basis or fair value option, di ba, may share sa non-controlling interest sa goodwill. So, how much is the share of the NCI? How much is the share of the NCI and the controlling interest sa goodwill? Okay? So, ang share ni controlling interest sa goodwill is the consideration transfer, which is 4 million less 80% of the fair value of your net assets is 1.6 million. And then the share of non-controlling interest in the goodwill, no, is 1 million na NCI less 3 million times 20% share ni NCI sa fair value of your net assets, which is 600,000. So we have 400,000. So the total goodwill, no, from the business combination is 2 million. No, it's just that 1.6 controlling interest and 400,000 kay non-controlling interest. Okay? But if the question is the total goodwill or the goodwill arising from the combination, of course, the answer is 2 million. No? So, you will notice that the assumed fair value of non-controlling interest is not lower, okay, so than the fair value of the net asset attributable to the non-controlling interest. Kasi di ba, as what I've explained kanina, no, hindi dapat na mas baba ang fair value ng non-controlling interest kesa sa proportionate share ni non-controlling interest in the net assets of the subsidiary. So, di ba yung proportionate share niya is 600,000. Share ni NCI sa net assets of the subsidiary. Okay? Pero, yung assumed fair value nato sa non-controlling interest is 1 million. So, the amount of the fair value of the non-controlling interest is valid. Okay? So, our total goodwill is 2 million and the amount of non-controlling interest is 1 million. Okay. Assume further that the company uses proportionate basis. So, in measuring goodwill and the fair value of the non-controlling interest, okay, so, diba, dalawang method man yun. So, either we have full or partial. So, pag full, yun siya since di given yung fair value for NCI, nag-assume tayo ng fair value, no? Pero, pag, when we use proportionate or partial goodwill, yung non-controlling interest natin is always equal to the proportionate share of the non-controlling interest in the net asset of the subsidiary, which is 600,000. Okay, so your consideration transfer plus non-controlling interest, no, we have 4.6 million, no, in total, less the fair value of your net assets. So we have goodwill of 1.6 million. Again, and then diba, in partial goodwill, walang share si non-controlling interest sa goodwill. So the entire goodwill is mag-accrue lang siya kay controlling interest. Okay? So our total goodwill from the business combination is 1.6 and the amount of non-controlling interest is 600,000. Again, pag partial goodwill, the goodwill is always equal to the proportionate share of NCI in the net assets of the subsidiary. Okay? So next, no, assume that JN Corporation acquired Company at a price of 4 million for an 80% interest in the company. Okay, so the fair value of the net identifiable asset of Company amounts to 3 million. Okay, so same illustration kanina, it's just that dito, the fair value of the non-controlling interest as of the date of possession amounts to 650,000. So, ang difference lang ito kanina is just that kanina, we use fair value or full goodwill, pero since hindi man given yung fair value of non-controlling interest, we assume the fair value of non-controlling interest. So, in case 2, the fair value of non-controlling interest is given. So, we'll use na fair value of non-controlling interest, no? Which is 650,000. So, to compute for the goodwill, diba, that's the sum of the consideration transferred plus the fair value of non-controlling interest as 4,650,000. Okay? Then, your fair value of your net assets is 3 million. So, you have a goodwill of 1,650,000 in total. Okay? So, the total goodwill is 1,650,000 and the non-controlling interest is 650,000 kasi yung fair value niya of the non-controlling interest. So, yung share ni controlling interest, no, sa goodwill, we have 1.6 million and share ni NCI is 50,000. Okay? No? So, there is no need to assume the fair value of non-controlling interest because it is already determined as of the date of acquisition. Okay? So, determined siya at 650,000. Okay? So, assume that the fair value, assume further that the company uses the proportionate basis in measuring the goodwill. So, it's actually same kanina, no? Na yung non-controlling interest will be at 600,000, okay? Yung proportionate share niya, no? So your total consideration transferred plus the fair value of non-controlling interest, that's 4.6 million. Plus fair value of your net assets, that's 3 million. You have goodwill of 1.6 million, okay? So yun siya, walang share sa non-controlling interest sa goodwill. Only allocated lang siya kay controlling interest, okay? Okay, on case 3, no, assume that JN Corporation acquired Company at a price of 4 million for a 80% interest in the company. So, the fair value of net identifiable assets of amounts to 3 million, and then the fair value of non-controlling interest as of the date of acquisition amounts to 550,000. So, still, that's the same illustration kanina, it's just that the fair value of the non-controlling interest, instead of 650, naging 550,000. So, in this scenario, we cannot use the given fair value of non-controlling interest because it is lower than the fair value of the net assets attributable to non-controlling interest, di ba? Which is 600,000. Okay, so ito yung case wherein hindi applicable si full goodwill. Okay? So, kasi mas lower yung fair value of non-controlling interest. So, even if the company will use fair value option, so hindi siya applicable, no? Kasi mas lower yung fair value of non-controlling interest kaysa sa proportionate share ni non-controlling interest sa net assets or fair value of the net assets of the subsidiary. Okay? Always be reminded that there should never be a negative goodwill attributable to the non-controlling interest. Okay? Even if the company will use the fair value approach, it is inappropriate in this scenario. So, therefore, we should use the proportionate approach. Wherein, so, same kanina pa din, no? Na the controlling plus non-controlling interest is 4.6 million, and then fair value of net assets 3 million, so you have goodwill of 1.6 million. Kasi automatic na ang gamitin natin is proportionate. Kasi we can never use the fair value option. So it is important that in every problem, always and all time check if the fair value attributable to non-controlling interest, which in this case we have 600,000, exceeds in the amount of the fair value of the net assets. Okay? So, okay, we have case 4. Okay, so assume that JN Corporation acquired Company at a price of 4 million, but it includes a control premium of 500,000 for 80% in the company. So the fair value of the identifiable assets amounts to 3 million. Okay, so since, di ba, hindi given yung fair value of the non-controlling interest, then we'll assume the fair value of the non-controlling interest. However, no, pag may control premium, iba yung case, no? So, ano ba yung control premium? So, control premium is the excess amount over the market acquisition price that the buyer is willing to pay in order to gain control. Okay, so it should be accounted as part of the controlling interest only. Therefore, we should avoid allocating any part of this control premium in accounting for the fair value of non-controlling interest. Meaning to say, pag mag-assume tayo ng fair value of non-controlling interest, we should deduct the control premium. If in the consideration transferred or yung price paid, it includes the control premium. So, i-deduct natin siya. No? So, if we will assume an amount of the non-controlling interest, we should exclude the amount of the control premium in the consideration transferred. Okay, so, in this case, to assume the fair value of the non-controlling interest, kasi nga di siya given, okay, so, the computation would be 4 million, i-deduct natin yung 500,000 na control premium, divide 80% times 20%. Okay? So, that's 875,000. Okay? Then, 4 million plus 875,000. So, the total consideration is 4,875,000. 875,000. Deduct fair value of net assets, you have goodwill of 1,875,000. Okay? Then, yung goodwill sa share ni controlling interest is 1.6 million and the share ni non-controlling interest is 275,000. So, in summary, the goodwill is 1,875,000. Then the non-controlling interest as computed kanina is 875,000. Okay? If the amount of the control premium is already excluded in the consideration transferred, the whole 4 million will be considered in assuming the fair value of non-controlling interest. Kasi if the problem states that the 4 million excludes control premium, okay, dili na i-deduct si 500,000, no? In assuming the fair value of your non-controlling interest. Okay, so ito, in case 5, assume that JN Corporation acquired Company at a price of 4 million, including a 500,000 control premium for an 80% in the company. So the fair value of the net identifiable assets of amounts to 4.5 million. Okay? So same kanina, when we assume the fair value of our non-controlling interest, it's 875,000, diba? Okay, so that's 4 million less 500,000, divide 80% times 20%, that's 875,000. Okay, so ito yung assumed value ng assumed fair value of non-controlling interest. However, no, the NCI's proportionate share is 900,000. That's 4,500,000 times 20%. So that's 900,000. So yung hindi pwede, no, nagamitin natin yung 875 because it's lower than the NCI's proportionate share in the fair value of the net assets of the subsidiary. So in this case, we'll use 900,000 as our non-controlling interest. So the consideration transferred plus non-controlling interest is 4.9 million less fair value of your net assets na 4.5 million. You have goodwill of 400,000. Okay, so since it used proportionate basis, no, so walang shares in non-controlling interest sa goodwill. So si controlling interest lang ang may share sa NCI, which is 400,000. Okay? Okay, so next we'll discuss step acquisition. So ano yung step acquisition? This is business combination achieved in stages. So this happens when a transaction results into gaining of control from no control. So because of additional stocks purchased. So the event is considered to be a step acquisition. So for example, we have investment in equity securities, no, or fair value investment in fair value to profit or loss, or investment in fair value through other comprehensive income, or an investment in associate becomes an investment in subsidiary by purchasing additional stocks of the subsidiary. Kasi yung accounting, diba, for if mag-purchase ka ng stock, magdepende siya if how much yung percentage na i-acquire mo. So, diba, if you purchase more than 20%, so may significant influence, so you'll use equity method, yung investment in associate, diba? So, pag more than 50% na, no? If you purchase more than 50%, then that becomes a subsidiary, no? So you'll use na IFRS 3, which is accounting for business combination. Okay, so step acquisition happens when initially wala kang control kasi you've purchased less than 50%. Okay, but since you acquired additional share, no, it results to the company obtaining control in another entity, no? So according to IFRS 3 paragraph 42, in a business combination achieving stages, the acquirer shall remeasure its previously held equity interest in the acquiree. Previously held equity interest, yung amount of yung equity interest niya before nag-gain siya ng control, no? At its acquisition date fair value, so yung previously held equity interest niya, i-measure niya at its acquisition date fair value and recognize the resulting gain or loss, if any, in profit or loss or other comprehensive income as appropriate. So to illustrate stock acquisition, there are two independent scenarios when a company gains control over an entity in a stock acquisition. So we'll present two cases. Okay, so first we have case one, from an investment in equity securities to investment in subsidiary. Okay, so investment is normally investment in equity securities siya if we purchase below 20%, no? Kasi pag more than 20%, diba, that's an associate na. So that's investment in associate. So Boss Corporation acquires 15% of stock company for 500,000 on January 1, 2017. So after 5 months, Boss acquired an additional 55%. So how much na yung percentage niya? That's 55 and 15%. Okay? That's 70% na. So it's more than 50% of the voting power, no, of an entity. So therefore, since more than na siya of the voting power of an entity, then it's an investment in subsidiary na that will be accounted under IFRS 3. No? So, yung consideration niya for acquiring 55% is 2,750,000. So the fair value of the 30% non-controlling interest as of this date amounts to 1,600,000. Okay? So the fair value of the net assets of stock company amounts to 4.5 million. So in this scenario, the business combination has effect from the purchase of additional stocks for another 55% interest. So the 500,000 equity security will be remeasured to 750,000. So how do we compute for the 750,000? Okay, so since diba, we've paid 2,750,000 for a 55% interest. Okay, so we simply divide 2,750 divide 55%, no, to get the 100%, and then multiply it to 15%. Okay, so before the business combination. So there is a gain of 250,000 kasi 'di ba, yung cost ng security, yung cost ng 15% share na na-acquire niya is 500,000, but its fair value is 750, so may gain tayo na up to 50,000. So the gain of 250,000 will be taken into profit or loss if the equity security previously held is measured as fair value to profit or loss. But if it's fair value through other comprehensive income, then the gain is taken into other comprehensive income. Okay? So to compute for the goodwill, diba? So to compute for the goodwill, so since the formula is, diba, the consideration transferred, that's 2,750 plus fair value of your non-controlling interest, which is actually given at 1.6 million, and then fair value of the previously held equity interest. So, yung fair value of previously held equity interest natin diba is 750,000. So, your total consideration natin, no, 2,750 na consideration transferred, fair value of previously held equity interest, and fair value of non-controlling interest. So, we have 5,100,000. Then we have 4.5 million as our fair value of net assets. We have 600,000 na goodwill. Okay? But the goodwill, if allocate mo siya into controlling interest and non-controlling interest, that's 350,000 for controlling interest and 250,000 for non-controlling interest. Okay? Yan siya. So, to compute sa controlling interest, that's 2,750 plus 750 less 3,150,000. So, how did we arrive to the 3,150,000? So this is 4.5 million times 70%, and this is 4.5 million times 30%. Okay? Yan siya. So the 600,000 goodwill is allocated to controlling interest at 350 and 250 for non-controlling interest. Okay? So the total goodwill is 600,000 and the non-controlling interest is 1.6 million. Okay? Okay, so I have our case 2. Yung case 1, diba, is from investment in equity security to investment in subsidiary. In this case, we have investment in associate to investment in subsidiary. So, Boss Corporation has an investment in associate on January 1, 2017 with a book value of 2.4 million. This equity investment represents 25% interest from stock company. Diba? If you purchase more than 20%, no, may significant influence ka na, and you'll use equity method of accounting, no? So to review equity method of accounting, di ba, sa equity method of accounting, so may share si investor sa net income ni subsidiary, and then mag-increase siya pag net income, mag-decrease pag may net loss, then mag-decrease if may dividends na declare. Okay, so on March 1, 2017, stock company declared and gave Boss Corporation a dividend of 250,000. Then on July 1, 2017, Boss Corporation acquired stocks and gained another 25% interest in the stock company for 3,850,000. So that's 35% and 25%. That's 60%, no? So it's more than na 50%. So that's investment in subsidiary na in accounting, no? So that will use IFRS 3 na, accounting for business combination. Okay, so the net income of stock company for the 6 months period amounts to 1.5 million. So dapat i-update muna natin ang balance ng investment in associate, no, after i-transfer natin siya from investment in subsidiary. So the fair value of your net assets of stock company as a business combination amounts to 10 million, while the fair value of non-controlling interest is 4.2 million. Okay? So to update the balance of investment in associate, diba, we have beginning balance of 2.4 million, that's the purchase price. Then since may profit na 1.5 million, may share tayo dyan ng 25%, so you have 375,000. Then yung dividends declared or dividends received ni na 250,000, no, i-deduct natin. So the adjusted book value of our investment in associate is 2,525,000. Okay, so the adjusted book value will be measured to the fair value of 2,750,000. So how do we compute for 2,750,000? That's 3,850,000 na purchase price of the 35% interest. So 3,850,000 divide 35% times 25%. Okay, yung 35%, diba, is yung additional shares na i-acquire niya. Then since nag-acquire siya ng 35%, another 35% for 3,850, no, to get the 100%, 3,850 divide 35%, and to get the fair value of the previously held equity interest, you multiply it by 25%. So we have 2,750 na fair value, no, of the fair value of the previously held equity interest less book value na 2,525,000. The difference of 225,000 will be taken into the profit or loss and a portion of a statement of comprehensive income. Okay, so yung adjusting entry niyan, so mag-debit ka lang ng investment and subsidiary, no, at 2,750 less investment credit investment in associate at 2,525,000, and then gain na 225,000, no, to record the transfer of from investment in associate to investment in subsidiary. Now, how do we compute for the goodwill in no, in non-controlling interest? Since no, given naman yung fair value of non-controlling interest, that's 4.2 million, and then diba, the computation for goodwill is the sum of the consideration transferred plus the fair value of the previously held equity interest plus the fair value of your non-controlling interest, that's the total 10.8 million, less the fair value of our net assets, which is 10 million. So we have 800,000 at our goodwill. But if we are to allocate goodwill into controlling interest and non-controlling interest, yung share ni controlling interest is 600,000, while the share of non-controlling interest is 200,000. Okay? So that ends the first part of the accounting for business combination, particularly stock acquisition. Okay, so thank you for listening.